calling the class just in case. Just in case. Can you guys see my screen?
No.
Okay, come. Come you.
Yes, I can see it now.
You can see my screen, right? Man,
Yes.
come you. You guys can see my screen, right?
Yes.
Okay. So I'm talking about. Let me talk about some stuff before I push. So yesterday I was talking about SMC. I'll talk about SMC like from just briefly into some stuff starting from SMC because of somebody. Okay, so SMC is just generally the SMC is meaning of SMC is smart money concept, and SMC is how will I put it now? SMC is a trading strategy. You understand? We have a lot of trading strategies out there. We have ICT, we have SMC, we have a lot of them, like different patterns of trading. You understand? But for me, I'm an SMC trader. I use the smart money concept trading strategy. You understand? So SMC just revolves around the market structures, how price reacts, how market structures form, how you enter the structures, how you take trades based on market structures. SMC traders or we SMC traders, we take trades or we take entries due to what we see on market structure. Our trading idea just revolves within the market structure. That's just within the market cycle. We just want to see a clearer structure either to the upside or to the downside. Understand? And in SMC, normal trading this we have two types of market structure. We have the bearish and the bullish. Understand? The bullish market structure is said to be when price is creating series of higher highs and higher lows, not only creating higher highs and higher lows, also breaking structures to the upside. Then say that that's a bullish market structure. Then for the bearish scenario, the market is making lower highs and lower lows to the downside, lower highs and lower lows to the downside. Then we say the market is bearish. So let me use this for an example. Market is creating higher highs and higher lows, continuous higher highs and higher lows, continuous higher highs and higher lows. This is said to be an uptrend. The same thing applies for a downtrend when market is creating lower highs and lower lows, lower highs and lower lows, lower highs and lower lows. So that's just that about the market structure. Now, once you understand the structural part of SMC of this strategy called SMC, the next thing you need to start focusing your mind on, what you need to start focusing your mind on, or all your attention should be, is how somebody or if someone comes to my game and asks me how do I like enter, how do I find entries? Now, this is where the entry part comes in. In SMC, we have what we call points of interest. You understand? Because when I made a post on my status, like I was asking I said they should some person should send me the topic. Like if I promise them in class or something like that. And majority of the messages I got was point of interest, point of interest, point of interest. So I kept wondering like what's this about point of interest. So point of interest just simply means it's an area in the market, it's an area of high value. Understand? An area of high value where where you know that yes, price will definitely come back to peak orders. You understand? That's why we have different types of we have two types of POI. You understand? We have the order block and we have the breaker block. You understand? Then if inside these two segments, we have something we call the continuation entries. Then along the line, then there's fair value gaps, you understand? But fair value gaps will just put them around the corner first because most of the time, fair value gap is a very nice POI, but most of the time it serves as liquidity. You understand? So that's that for fair value gaps. But for SMC, we have two types of POI that I make use of. You understand? So I make use of the order blocks. I make use of the sorry. I make use of the order blocks and the breaker blocks. So that's the two types of POI I make use of. So I make use of the order blocks and the breaker blocks. So these are the two types of POI I make use of. You understand? So these are the two types of POI, and I'm going to explain how they work and stuff like that. So when you hear something is an order block in when it comes to the financial aspect, once you hear something is like an order block, it means something that has mass or that has an area in the market that has a very large pending transaction. You understand? That's what an order block is called. Now we can't with our two eyes we can't spot it, but from the help of the candlesticks, we can easily identify an order block. And you notice if you like put it through, you see that most of the times price tends to like play out very, very well at these zones. Why? Because these are high probability order blocks. You understand? There are factors that guide these order blocks and makes them um, valid and makes them a high probability order blocks. You understand? Then we have breaker blocks. And breaker block is a simple, but the most confusing to trade. But I'm going to explain. Zero panic. I'm going to explain. So breaker blocks is simply an order block that fails to like hold price. You understand? Let me just say a breaker block is a field order block. You understand? Let me give for an example. Let me give you an instance. If market is actually in an uptrend and we're looking to like take a trade from this order block. Now let's take for an instance, here is an order block. Then what we're expecting is the market to come and react from here. And eventually markets did come here and react. Then we give you like 20 pips, 30 pips move. Then all of a sudden you have this kind of now at this point now this is no longer an order block. It's a breaker block because now it's filled because why? Price failed to push further from this zone. So he said that whenever there's a breaker block, instead of trading from here again, what you do is to wait for price to come back to this zone. That's this order block that failed. You wait for price to come there, then sell. There are a lot of criteria to it too. So I'm going to explain. Understand? So now let's get back to the other blocks. I'll talk about the continuation and stuff. Continuation comes in stay in line with this POIs and stuff like that. So talking about other blocks, you understand? Other blocks, like I said earlier, other blocks is is a level in the market that has an area or a zone in the market that has a large number of pending orders. Understand? When you hear block means like large money in when it comes to finance. There's a block, something is block. Just like somebody telling you, oh, no, that guy hits block money. It's like large money, like money is very big. Understand? So in SMC, we call them order blocks. You understand? Because they are pending orders and they are large pending orders. That's why you see market. That's why sometimes you just notice that market will just get to, or price will just get to a particular point in the market, they start reacting. You'll be like, why is market reacting? It's either it's reacting to an order block or it's reacting to a breaker block. Understand? So this is like make you identify an order block. You understand? An order block, we have two types of order block. We have two types. We have two types of order block. The first one is the bullish order block. The bullish order block. And the second one is the bearish. The reason why we have the bullish and the bearish stuff, or majority of the times why these things are classified as bullish and bearish stuff, bullish and bearish this, because the market moves in two ways. The market is either the market is bullish or the market is bearish. That's for the trend. It's either the market is bullish or the market is bearish. That's why I say the classification is always bearish this, bearish that, bearish this, bearish that. So that's just that's for that. So now we have two types of order block. We have the bullish order block and the bearish order block. Now, how do you identify the bullish order block? The bullish order block is said to be the last bearish candlestick that was traded before an impulsive buy candle. You understand? Now, this is where I feel most persons get it wrong. You understand? Some persons will just come down and see, maybe you get a bearish candle, nice. Then you get another candle that is like this. Maybe price did not even just close a week below this zone. A week below this zone. Now, what you be expecting now is for price to come back to this zone. Now, price might actually react to it. Price might actually react to the order block. The zone you mark as your order block, price might actually react to it. Now, if price reacts to it, maybe I give you like 20 pips, 30, 50 pips. I'm just saying it based on experience, what I've seen. At the end of the day, market reverse and hit your stop loss. Now, not because your technicals were wrong, but it's just because you just picked an order block that is not valid. You understand? An order block that is not valid. That's what I'm going to explain. I'm going to show you on the live chat. You understand? So we're talking about the bullish order block. The bullish order block is said to be the last bearish candlestick that was traded before an impulsive bullish candle. The same thing. The same explanation for the bearish order block. The bearish order block is also the last bullish candlestick that was traded before an impulsive bearish candle. You understand? Now that's where I feel most persons get it wrong, because if you don't put this, because there are factors. It's not just I was telling I do make a post on my stage. I said that you find out that the whole stuff SMCs, if you calm down and you observe this trading strategy called SMC, you find out that it's far beyond just the normal structure. We simply saying structure, liquidity, and point of interest. Now, it's not all about picking your point. It's not all about a point of interest. How sure are you that your point of interest would play according to your technicals? The place you picked as your point of interest, how sure are you that if price gets there, it's going to play out? That's the thing. And now, if you're picking a point of interest that is not valid, start playing with your psychology. Let me tell you one thing that happens with a valid point of interest. A point of interest that is valid, if market triggers your entry, maybe at that point of interest, and moves, you know what market does? Most of the times, market will come back to that same point. Maybe some person might have said break even already. Market will take them out at break even and move. You understand? That's why in most cases I don't like trading break even. I don't break even on some kind of trades. You understand? So if you pick, I'll show you some examples. You notice that markets will actually come. Market will come. Let's say you had an order block that is pending, and you are like, okay, I want price to tap me from here. My entry is at this order block. Why? Because Number one, your technicals is in line with the market trend and okay, market direction, sharp. Now you're looking for an order block. Now, once you see a high probability order block, if market triggers that order block or pick orders from there, it moves. Sometimes it gives you 50, 100 pips. Oh, it will retrace, come back to that same zone, that same your same entry zone to do what? To move, then to start moving ahead to your TP. I'm saying this not because of I know or I mean I control the market or something like that. It's just because it's from experience. It's what I've seen over the time I've been trading SMC trading strategy. I've seen it occurs. I'll show you on my chart here. So that's just that about a high probability order block. The same thing applies to a breaker block. We also have two types of breaker blocks. We have the bearish and the bullish order block. Now, the bearish order block, the bullish order block is said to be a field. The bullish order block is breaker block is said to be a failed bearish breaker block and bearish order block. You understand? An order block and a bearish order block that fails to hold price. You understand? Is known as a bullish order block. The same thing is vice versa. A bullish order block that failed to hold price is called a bearish breaker block. You understand? So that's just the mix. So I'm going to show you guys an example on the chart. So what matters is how you pick the one that is correct, not just about the stuff. Let me show you guys some examples on my chart, and I'll use my chart to explain. I think I should have other block set up on Euro USD or stuff like that. Let me look for past trades and show you guys, so you know how you pick an order block that is valid. Coming. Okay, now let me go to the 4-hour time frame or 3-hour time frame and see if I can sharp. Now if you notice very well, but if you notice this Euro USD buy trade was as a result of picking a valid order block. You understand? Now just pay close attention to me, because this thing I'm about to say is something that you won't find regularly online or stuff like that, or most of the time not everybody will tell you. I just tell you, once you see that most of the things I do see is if the order block is not mitigated, you wait for price to tap it and move. How are you sure that if price, yes, it's not mitigated, but chances of price getting to that particular order block and reacting to it, heading to your TP, what are the chances? That's what you look out for. Now, one thing you need to know about SMC is, now once you understand it and once you know how to pick the valid points of interest, that's the valid order blocks or breaker blocks to trade, it boosts your confidence, it boosts your accounts, and it gives you more profits and less losses. I'm not saying you will make loss. Losses are inevitable, you can't avoid them. You'll make loss, but if, let's take for instance, you're taking 5 trades, you're sure of if you're sure of 3 playing out and 2 hitting stop loss. Why on most occasions the 5 trades plays out? Understand? I've experienced it. Understand? So I'm not saying that SMC controls the market or something like that. No, it's just a trading strategy, is an approach we use to take trades. So definitely, if you're taking a one thing I've noticed about SMC, if you have 5 trading setups, if that trade is going to hit stop loss, it might be one setup, the remaining 4 play out. That's if where you're picking as your entry zones are very, very valid. Understand? So now let's talk about the order, back to the order blocks. Now there are rules that guides an order block. An order block is not just any ordinary order block. You understand? It's not just any ordinary order block. So first of all, one thing you need to put in consideration when picking an order block or your point of interest in general is number one, the first risk it must be unmitigated. You understand? Like the first risk it must be unmitigated. Now, what do I mean by unmitigated? Unmitigation means price has not actually tapped into that other block. Market has not used the other block to push forward. Market has not used the other block to like actually buy. The other block is still fresh. Yesterday, I gave an example where I was talking about a new phone. You understand? When it comes to like mitigation, I use an example. Let's take for an instance, I want to use an iPhone. Or I want to buy an iPhone 16 or 17 Pro Max for an instance. Now, if I walk into the Apple store and I tell them to give me a new phone and they give me a phone that somebody has already used, maybe the person has used it for 3 years. Do you think if I buy the phone, I'll enjoy the phone? I won't enjoy the phone. Why? Because someone else has already tampered with the phone. Only God knows what the person has done to the phone, how many repairs has the phone undergone before selling it to me. But if I buy a phone that is brand new, I unboxed it, everything, it was me. The phone, what happens? My reaction to that phone is I'll be very happy, number one, and I'll love the phone. The phone, I'll feel so comfortable with the phone. Why? Because I bought it as a new phone. That's how POIs are. That's why you see, that's why if you go online, you say once market has tapped into a POI before. That's once market has used a POI before or an order block or a breaker block, it's not advisable for you to trade. It's not advisable to take trades from that zone because there's every possibilities, there's every 80% chance that markets will keep stopping. So the first rule we need to consider when picking the point of interest is it must be unmitigated. That's price has not even tapped into it. It's still fresh. And market has not even dreamt of tapping that zone. You understand? That's unmitigated. Then number two must be in line with the market direction. You understand? Because this is another factor I see that affects some persons. Now, let's take for an instance now, your technical said or market by your after directional bias that's looking for the market trend. Now, what comes to your mind is okay, the market is actually bullish or it's bearish. That means a bullish market. So the market is bullish. Now, what you should be looking out for now is what bullish order blocks. Now, I see in most cases. Now you see that the market is actually bullish, and you're looking to take trades at a bearish order block. It's not that the bearish order block is not valid. It's on most occasions they are very valid bearish order block. But what happens to them? Market bypass it. Market do not even respect. Why? Because the trend says they are bullish. So there's at that point there's no point for taking a sell. You understand? So that's a mistake that most persons used to do. When you're picking your order block should be in line with the market trade. I used to see it on my WhatsApp group that if my buyer is bullish or my bias is bearish, I don't take a counter setup. Like no matter how beautiful that setup looks like, I don't take it. Why? Because from experience, I've done that so many times and it landed me in break even stop loss, break even stop loss. So now once my bias is bearish, what I should be looking out for is bearish order block. Even if a bullish order block shows up, I am not expected to take a trade from that other block. Why? Because the buyers or the market trend says we are bearish. The same thing applies to a bullish market. If you're don't looking for your market trend, that's the market direction. The next thing that comes to your mind is looking for possible buy POIs. Now, I'm not looking for a positive. It's just like you see a buy trend now and you see a bearish order block. The bearish order block is very, very valid. You understand? The bearish order block is very, very valid. Everything is intact. And now you're setting sell limits on a buy market, sell limit. Now, on most occasions, market will react. Sometimes you might get lucky, price will hit your take profit, but that's a risky trade. Why on most occasions, price will just give you maybe 10 pips, then bust your SL. At that point now, you've taken a crazy stop loss. Now, when you're showing it to somebody, will ask you, why are you selling on the buying market? Or why are you buying on the selling market? So that's just it. So the second thing there is your order block must be in line with the with market direct trend. Your order block must be in line with the market trend. Then number three, the third one. This one I want to talk about is very, very important, because this one I want to talk about now gives your order block a high probability. You understand that once you spot, you know that yes, price is going to play from this thing. If a stop loss occurred, it's just due to like an economic event or due to news or some kind of economic stuff that just happened based on fundamentals. You understand? Now the third one is the candles. The candle. Now we talked about let me talk about bullish order block. Now a bullish order block is said to be the last bearish candlestick that was traded before a buy candle. You understand? That's for a bullish order block. The last bearish candlestick that was being traded, that was formed or being traded before a bullish order block. Now, a bullish candle, sorry, the last bearish candle that was traded before a bullish candle. Now the last bearish candle that was being traded is not the problem. Now you see that bullish candle. You understand? Because now the whole idea behind the order block says for a bullish order block is said to be the last bearish order block, the last bearish candle that was being traded before a bullish candle. You understand? Now now this is a very key rule, or is a very key concept when you're picking an order block. Understand? That's what I do. That's why there's some other blocks somebody will mark on this chart. I'll look at it and I'll say no. I'll just tell you that price will not play, because there are some things that I was expecting to see, but I didn't see them. Understand? Now for you to get a high probability order block, now let's talk about the bullish order block. The bullish order block is said to be the last bearish candle that was traded before a bullish candle. Now that bullish candle that was formed after the bearish candle must be an engulfing candle. Like it must be a full body close candle. Now let me give you an example of a full body close candle. Now this you see the way this candle, you see this particular candle here, this particular candle. This is a full body close candle. It's a perfect example of an engulfing candle. You understand? It's a perfect example. It must close above that bearish candle with a full body close, like it must engulf. Understand? That's one thing I feel when it comes to SMC. We feel it's just all about the structure, the liquidity. Now we forget to pay close attention to the candlesticks. Now for SMC, the candle the candlestick formation you need to pay close attention to as an SMC trader is the engulfing candle. That candle alone can tell you this POI is valid, this one is not valid, this one is valid. Because I'm putting at number 3 because it's very important. The number 1 and the number 2. I'm supposed to make it as number 1, sorry, but I feel the number 1 and the number 2 is something that I need to bring. But you see, this number 3 is very valid. It's something that I've tested, I've traded, I've seen it. It's something that works. So now, as an SMC trader, the candlestick you need to pay close attention to the most. I'm not saying you can't pay close attention to other candles or stuff, but the one you pay close attention to the most is the engulfing candle. It's the engulfing candle. I'll show you. I'll give you proof. I'll give you proof on some setups I took. I'll show you some trades I took and how they played out. Then I'll explain everything behind that trade and show you that, okay, yes, you see that, yes, okay, this is what I pay close attention to. Now, if you notice, see, now this is a Euro USD buy trade. But before I explain, let me continue. So now the third rule says the candlestick that is closed, the candlestick, that's the after the last bearish candlestick that was being traded, the bullish candlestick that is formed, that is expected to form, is an engulfing candlestick, an engulfing buy candle, something like this. It must be a full body close. This is a full body close candle, a full body close. It must close, or it must engulf above the bearish candle. Yes, it's something. It must engulf above the bearish candle. So then, thirdly, your order block should trigger a break of structure. You understand? Your order block should either trigger a shift in market structure or a break of structure. You understand? So your order block, number 1, must be unmitigated. Number 2, it must be in line with the market direction. Number 3, the candlestick that the bullish candlestick, that's for a bullish order block. The candlestick that was traded that is expected to be formed after a bearish candle is an engulfing buy candle. The same thing for a bearish order block. After the last bullish candlestick that was traded, the next candle that is expected to form is a bearish engulfing candle, a full body close candle. Why I'm stressing on this because it gives your trade high probability. And now, once you're taking trades from here, you are very much comfortable. You understand? You're very much comfortable, and you're very much comfortable. And when you're taking these trades, you don't have a problem. All you need to do is to wait for price to just come to your entry, pick orders, and move. I'm not saying that you can't hit stop loss. It can happen, but if you're to take like 5 trades, out of that 5 trades, you might just have 1 stop loss and 40 P's, and that's cool. Depends on your risk management. That's very cool. So now these things I said now is something that you need to pay close attention. I said number 1, it must be unmitigated. Number 2, it must be in line with the market direction. Number 3, the candlestick that is being formed, after the bearish or the bullish candle must be an engulfing candle. Fourth, it must trigger a break of structure, a shift in market structure, or a change of character. In some persons know that change of character and market structure shift, they are the same thing. And the fifth rule, your order block must have liquidity around it. Liquidity in the sense your order block must have liquidity, either fair value gap or inducement liquidity. And your order block must have a fair value gap or an inducement liquidity. in most occasions you can see and a fair value gap would appear and an inducement liquidity will appear. That one too also like tells you that okay, this other block is very, very, very bad. So now when you put all these factors together, it now helps you to know whether the other block you're picking, if it's a valid one or it's not a valid one. So that's just that. So you just need to like follow the rules. Understand? Once you're able to follow the rules, you tend to make more profits and making less losses. Understand? Because there are some tricks set up that you don't see there, that when you look at them, they are not valid. I used to tell somebody it's not every trade pattern or not every trade setup you hop, before you hop on a particular entry, before you take a zone for either buys or sells, you need to put that zone into consideration. You need to like pay a close attention to it. You need to say, okay, is this in line? Is this correct? Did this happen? Did this happen? Now, let me use this Euro USD as an example. I'll still look for other examples and show you. Now, I had a bearish candlestick here that was formed. This bearish candlestick was the last one that was formed before this engulf. Now, price closed above it, also creating a break of structure. Now, price closed above it, also doing what? Breaking structure. Now, and if you look at it, it's unmitigated. Now, let's put the rules intact. Now, first of all, it was unmitigated. If you look at it, price did not mitigate it, price did not tap it, price has not used it before. Then number two, it's in line with the market direction. Why? Because my buyer said I should buy, and I was looking out to taking buy other blocks. Then third, now the candle, the candle that was formed after the bearish candle was engulfed or closed above it. See how it closed with the full body, closed above it, the full body candle, which is an engulfing candle. Now, fourthly, it broke structure. This is it. It's created a break of structure. This is the break of structure here. This one. Coming. Let me put that as a BOS. So that's it. BOS, that's break of structure. Now this is the break of structure. This is the other block. Now we say that it must have liquidity around it. Now, if you look at it very well, we also had like fair value gap here, and we also had inducement liquidity. Now, inducement is said to be the first pullback the market makes after a break or shift in market structure. It's your inducement. After a break of structure, the second candle that market forms is your inducement liquidity. Now, if that candle did not mitigate the other block, then it's the trade, that other block is valid to be used for a buy move. You understand? So that's what I put in place. That's the same thing I followed here. The other block was not mitigated. The candle that closed above it was an engulfing candle. It closed with a full body. Then it triggered a break of structure, and it was in line with the market trend. What happened? I waited patiently for price. When price came, it did not disturb my stop losses on other trades. So I'll show you my stop losses were not even disturbed. What happened? Market go to full TP. You understand? So at that day for me, it was actually cool because I just made like good trade without even stressing my head. So that's that, because I put all the rules intact, everything were intact. Now my PY was not mitigated. Now I mapped it out with this line. You can also map it out with your box, this rectangle or something like that. So other block, see that price is not mitigated. And when what we're expecting now was for price to come back to that zone, markets came back, tapped in and got to TP. So that's just that about the whole trade. That's just the whole idea behind it. That's just what I saw. Then I took my buy entries from here. So let me see if I've got another example. I think I have them here on Euro USD. Whilst or I'll look for a chart example and show you guys to see if I can spot any that happened before. I'm coming. If I don't get anyone here, I think I should have here. So that's for so that's for I should have other blocks. Can't find this block. This one's a breakout block. Breakout block. No, I need another block. This one's a breakout. Those are continuation entry. I need another one. This one is continuation. I'm coming. Let me see if I can find an other block. I'm looking for an other block. Other block. Any other block here? Yeah, so yesterday I talked about breakout blocks. Though yesterday's class, class, I think I recorded it now. Sharp. I like this. So this is sorry. So this is another example of a valid bullish order block. Now, what did you notice? Now everything was intact. If you pay close attention to this trade, if you see the move that market made, it got to full TP. Now, if you pay close attention to it, the first rule says it must be unmitigated, and the POI was not mitigated. In my mind, I was like, okay, the POI was not mitigated. Then, secondly, was it in line with the market move? Yes, it was, because at that point, US 30 was actually bullish. This trade you are saying here is to take out. This trade was to take out this, was to push this, was for price to come pick at this other block and continue moving to the upside, because US 30 was actually bullish. Though I did not execute this particular trade because I was just doing some analysis on it. So now, if you notice, markets broke what structure to the upside. Like now, it was unmitigated. Number one rule says it must be unmitigated, and that's what happened here. Fine, unmitigated. I mapped it out and I said, okay, now what are the other criteria? What are the other things there that make this other block valid? Number two, it was in line with the market direction. If it's not in line with the market direction, price would snub it. Price would snub it. Would take me out on SL. Number three, now the candle that engulfed it was a full body close candle, which is this engulfing candle. See it. This candle alone, this kind of candle close is the signal, is one of the key signals you need when picking the other block. It's just that thing to, like, you need to see it. So other blocks are not just about this thing. Now they said, now for a bullish order block, like I said, it's the last bearish candle that was traded before a buy candle. Now that buy candle that forms is what will tell you if, now the buy candle and these criteria will tell you if that other block is very, very valid. Now, once you see this now, you know that, oh, sharp, my other block is valid. Not only did it close with a full body close, now it also broke structure. So it created a break of structure here and here. So that's two break of, no, I mean three of them. They had first one, second one, third one. So now what happened? Now you also have your liquidity. Now that's the first pullback the market made after this move did not mitigate this, which is your inducement. Now what did price do? When price moved, now you set your limit here, patiently waiting. Came back to this point. If you look at it very well, market came back to it and moved. It moved like moved. So one thing I noticed about a high probability point of interest is market don't disturb your stop loss irrespective of the pullback that occurs or something like that. So you see, so imagine you are taking this kind of trade now, maybe on your $100 account or your prop firm. It's enough for you to pass your prop firm. You understand? It's just enough for you to pass your prop firm. I think this type of trade, I had it back. I can't remember, but I think I had a particular US 30 buy trade where I bought an equity hedge prop firm. I was taking the trade, so I was to make I think 10% of the capital, which is $250, because I bought a $2,500. I'm not this prop firm guy, so to trade prop firm I have to like start from the list. So when I bought the account, I passed. I think I passed I was on Friday morning. The trade was supposed to hit take profit and close at with a profit of about 300 and something dollars. But when I woke up, they denied me of that account. Reasons I don't know, because sometimes these firms they have their own cycle, so I didn't let it stress my head or something like that. And so now, still on the other block path. Now, still on the other block path. Let me show you guys something again. Let me show you that this thing works. Now we have a bearish order block here. A bullish order block. Notice the candle that closed above it. That's after this bearish candle. The candle that formed was a full body close candle. It also broke structure to the upside, and it also had liquidity here. What happened when markets moved? It came back, picked from there, and bought. So that was the whole idea behind this buy trade. So it's not something that it's not something that what I say here is like I don't treat what I say here. Something I do every single time whenever I want to pick a point of interest. Whenever I want to take a point of interest, it's something that I look out for every single time. Every single time. Now this is I think this setup, this one, let me see if I can get a clearer picture from. Let me see if I can get a clear picture from the 1 hour time frame, because I think this trade, this bearish order block, is 1 hour time frame order block. Oh god, I think it's 1 hour time frame. Yes, sure. Now if you pay close attention to the reason why I took this trade, if you look at it very well, you find out that now the last bullish candlestick that was traded here, if you look at it, after that we had this candlestick. You see this candle, no matter how small it is, make sure that if it's closing, like for the bullish order block, if it's closing above, it should be a full body close. For the bearish order block, if it is closing below, it should be, if it's closing below, no matter how small the candle is, it should close below the bullish candle. Like it should close with a full body close. You understand? So that's the reason behind this order block. So now what did you notice? It also broke structure to the downside and also had inducement liquidity. Then I waited patiently, I mapped it out, then I waited patiently for price to come. Market moved, and let me show you something. I got full TP hit on the trade. So it's not that George does magic or something like that or blah blah blah. See, majority of my POIs, I'm not saying that I don't hit stop loss. I take losses too. Yes, I take losses. Like I take losses too. But majority of my trades, price does not disturb my SL because why I pick other blocks with high probability. I don't just pick other blocks on the regular. Say I was telling somebody that it's possible for you to fund it's possible for you to fund $5 with a very good risk management. I know some people like $5 is small. What kind of risk management? It's with a very good risk management. I know some person will be like, in a $5 account, the trade is a high probability trade. Even if it's high probability, risk management is very, very important. I was saying with $5 $5, you can comfortably trade your $5 from you can take your account from $5 to 700. Can you take it to 10K? Maybe in a year or something like that. At the end of the day, I made 20K from $5. Now, the way you're asked you're telling some persons, they'll be like, no, it's not possible. It's very, very possible. Now, what you need to do is to pick trades with high probability. One thing, if you notice very well, some weeks I don't post setups on my or it looks as if I am not trading. If I don't see my setup, what I do is I just leave the chart. It's not every move I must hop in. I must make profit or I must trade until I get clarity. You understand? So now is that stuff now that's really been helping me. This is a break and this is a break. I'm looking for other plug. Now this one is a buy order block. So now what did we notice now? The candle that closed that the candle that closed above it is an engulfing candle. See it 1 2. Now what did market do? Market came tapped in and moved without even stressing my stop loss. So it's just basically and is in line with the market direction. It's just basically something that I've been using for a very, very long time. So it's just something I've been using. So if you apply the same thing, if you apply the same thing, it's something that would it works all the time. It works. If you apply the same rule, it works. If you follow this thing that I just said here, you see results. You can test it on your $10 account. Just chill, patiently wait for that trade. Let the trade play out. Then you see. Just wait for market to form that trade. Then you see that I'm making like cool profits from it. Now it's not because of there's this magic or there's this kind of like how will I put it now? There's this kind of fix that I just take. It's just the simple stuff like this. Now whenever you're taking an order block, just make sure that the order block is not mitigated. Now the candle that is closing below it is a full body close candle and the engulfing candle. That's see when it comes to candlestick, you understand we have different types of candlestick formation. We have trickles and stuff. I've forgotten them. I can't even remember again. But the one that is very important to me as an SMC trader is the engulfing candle. That thing alone is my signal. You see that engulfing. Now I used to talk. There was one time I made a post on my status where I said, if you understand violation and mitigation, then I think you should have more TPs than you should have more TPs and less SM. If you understand this. Now this candle now, but this full body close, this engulfing candle is a violation candle. You understand? Like it's closing above is below or above is zone, the full body close. Although violation and mitigation tends to happen more on I think it tends to happen more on breaker blocks and continuation entries. Understand? Let me use this one for an instance now. Now this is a continuation entry. Now this is a break of structure to the downside because after market tapped here, after market tapped here, it started moving. Then I was looking for possible re-entry when I saw that market was actually reversing from here. Then I saw this break of structure to the downside. Then I noticed that now the candle that was creating that break of structure is a violation candle, and it's what, an engulfing candle. See, as an SMC trader, your candlestick signal is your engulfing. You need to just see it. Once you see it, it gives you confidence. Now, what happened? I waited patiently for the second candle reaction. The second candle reaction, or the second candle that is to form, is your mitigation candle. You see your inducement candle. Your mitigation candle is your inducement candle. So what I waited for now was for price to come and pick orders here. So actually, market came, did not tap me in, missed entry, and also went to take profit. So if you calculate from here to here, everything is still a full TP trade. So that's just that um that. So as an SMC trader, the candle you need to like pay candlestick, you need to pay close attention to, because we neglect it because we feel it's just structured liquidity, point of interest. Almost it's not like that though. It's not like that because SMC setups tend to form because SMC is like the big banks, like trading in line with the big guys. That's what SMC does. And now you need to be very, very careful. You don't need to just like hop on every move. Basically, it's not every setup you see that is set up. That's why I notice I don't just move on every trade. It's not every trade I take. Sometimes when I take stop losses, and I look at the stop loss, I'm like, well, this is just market's own manipulation. It's not that this thing. Most of the time I might be wrong or I will be wrong. You understand? But for the few times I've traded, I discovered that if I've traded a whole week where I had only just two trades, and those two trades were two TPs. Why? Because I understand how my strategy works. One thing, not just coming out and saying you are an SMC trader. I need to understand how SMC works. SMC trading strategy is a strategy of patience. If you are not a patient person, and then I think you should be scalping. And you are not even scalping too requires patience. Every trading strategy requires patience. So as a trader, as an SMC trader, you must be a patient person by fire by force. It's not, something that you can't just like can't just approach. You must be patient. So that's just that. So it's just something that I've basically been using for, sorry, it's something that I've been using for a while now, and it's something that I've seen results. So let me check some stuff like that. I think I should use I don't know if I have, let me see if I have some setups here that I've actually like traded before. So I'll use them as example. Let me see if I have any other block here. If I have any other block. No, I don't have another block here. I don't have. I took SL on that BTC trade because of the same thing I was saying. As the market direction was bearish, I saw I saw a very good entry. I even posted it on WhatsApp. I was risking that trade. It turned out to be stop loss. Well, that's that's my fault because I was actually going against the real deal. So one thing is never go against market direction. Now this is another example. That example of a bullish order blow. This is a clearer example. So this is a clearer example. This is a clearer example. of a bullish order block. Now, first of all, you see, I have this bearish candlestick here. See this bearish candlestick here. Now, you see this candle that closed above it here. See this candle. Sometimes it's like this, but you have to pay close attention. Sometimes it's not every, how will I put it now? You need to, one thing about SMC trader, as an SMC trader, your eyes needs to be active, like your eyes needs to be sharp. Now, observe this trade. Now, first of all, it was unmitigated, right? Yes. Now, the second row, it was in line with the market direction. Why? Because we're bullish that week. I was actually bullish on BTC that period. Now, the third row, the candle that was being traded after the bearish is what a body full engulfing candle. See it. If I move to the 2 hour time frame now, you see that it's just a single candle. It's just that on the 1 hour time frame, it's looking like this. If you go to the 2 hour time frame, you see that it's a full candle. Now, what did it do? It broke structure to the upside. Broke here 1 and 2. Also continued 3. Now came back. The second candle reaction did not mitigate, which is an inducement candle. Then I waited patiently for price to tag me in. Then it moved. It did not disturb my stop loss at all. My stop loss was not even stressed. I think that's just how I've been trading basically. Let me see if I'll get other blocks. These ones are just breaker blocks. Now I think this should be a bearish order block, but the time frame I did this analysis, but I can't find. Let me look for the one that is clearer. Let me look for something that is clearer. All right, I think I've got one here again. Now, if you notice, the same rule apply. The same rule apply. See, it's just that the majority of the time I take more buy trees than sell trees. So that's why I see I have more buy this thing buy other blocks. The same thing is the same thing. The same thing that happens here is the same thing you need to like pay attention to on the same thing happens on the bearish market. Understand? Or for a bearish order block. Now, if you notice now, we had our order block here. Now, after this, the candle that formed was an engulfing candle and also broke structure. See it? It was in line with the market trend. Now, after market, now this is where the patience come in. Now, this let me say something that I see that is very, very common, or I feel that happens maybe within us as traders. See, whenever price is approaching to your buy order to your buy, maybe to your buy limits, maybe you're trading from the bullish order block. One mistake you should never make is to sell into your POI. Sell or buy into your POI, because I've made that mistake before. Okay, you know that price is coming to your POI, you now say, okay, let me just enter at CMP, that's current market price. Then you start selling. And now that trade is supposed to flip that your $10 or your $50 or your $100 or your $5,000 to something cool without you stressing yourself, without playing with your psychology or something like that. Then you start selling. The market will just make one crazy retracement move. You just make one reversal move like that and take you out. At that point now your capital is gone. Then only for you to find out that the market will come back to your zone. Comfortably pick orders there and move. And when you are looking at the trade, you'll be like, oh, if I had known, I'd have waited for price to tag me. But at that point, it's your fault. One thing you should never do is don't ever sell or buy into your POI, irrespective of how that setup looks like. It's wrong. one thing is all these things is just trading discipline. You understand? Just discipline that you need to. It's just discipline that you need to cultivate for yourself. So now this is a bearish order blow. The same thing happens. The last bearish candle that was traded, a bullish candle. The last bullish candlestick that was traded here. Pay close attention to it very, very well. See it here. Now what happened? Waited for market to do what? To come to that zone. Now everything was intact. Everything was intact. Now the candle that closed below it is an engulfing candle, a full body close candle. We broke structure one, structure two, structure. This is not a structure, this is a break. Now it broke 1, 2, and 3. Now you see I mapped it. I even mapped it at other block liquidity, then it breaks. Now what happened? We waited patiently for price to get there. My stop losses was not a stop. The price hit TP successful. So that's just how this setup that's just how it works. So if you pay a very close attention to it, you see that it's something that is not, how will I put it now? It's not something that is difficult. It's not something that is difficult. Now let me explain this. Let me explain this. There's another sell trade I want to. There's one sell setup I want to explain. I think that's a sell on that block. I don't know if I can talk about breaker blocks today, though, but if I can talk about it today, I just want you guys to get clear how to identify this. I think this should be a 15 minutes trade. This is 15 minutes. This is 15 minutes. I want to explain this. I want to explain. I want to explain this. I want to explain this. I want to explain this. I took this setup on 15 minutes time frame. Sometimes just do my technicals and I wait for markets to play along sharp. I knew it was 15 minutes time frame. Now, if you pay close attention to this trade, we had a bearish order block, and now the bearish order block is the last bullish candlestick that was formed. The last
I'm not seeing your screen again. Or your screen is not showing. Sir, Jesus.
Can you hear me now?
Yes, I can hear you.
Okay. Okay. Let me share my screen. Sorry, I don't know what happened. So you can see my screen, right?
Yes, sir.
Can you see my screen? Okay.
Yes,
No problem, no problem. So now, okay, no problem. So if you pay close attention now, you see that market actually this is a very short block. What happened? It broke structure. Then the second can talking about mitigation, violation, mitigation. But we'll talk about violation and mitigation is for breaker blocks. I talked about it on yesterday's class. I think yesterday's class, but I will still send the both video this evening. After this class, I'll drop the both of them so you can like go back to them and watch if you missed it. So now this is it. This is just it. Now what happened? I waited patiently for this setup. Market came. By that point, the market was actually wanted to play with my psychology, but I still held the trade, right? Because I knew where price was going to. Market tagged me in and sold, and the trade went to a FTP. So you can see the trade. So that's just it. So once you keep to these rules, this thing I see, I just said here. Now it's I'm not saying you won't hit stop loss, so but it's going to be like rain. Why? Because first of all, before you take the trade, you have to validate it. You have to validate the trade. Is this trade even valid or not? Is this trade valid or not? So that let me check another pay. And tomorrow is Sunday. Already getting from colleagues in night and the let me see if I have something like that on USDJPY. This pair is very tough to trade. Yeah, SGPY is one of the toughest pairs I've ever come across. Very tough. Let me so USDJPY, USDJPY, USDJPY. Still experiencing broke for you. USDJPY, USDJPY. I don't have a trade. Um, this was lost. This trade is my fault. I was thinking price was going to feed this gap, but my bias was actually bearish. But I wanted price to feed this gap, then take out this liquidity. But it's all good, it's all good, it's all clear. So, this is break. I'm looking for other blocks. Let me check gold. Hey, like does this thing work on gold? See, I've traded gold for a while and I discovered that gold is the coolest pair to trade. And it sounds crazy, but sorry, it sounds crazy, but gold is actually gold is actually
You're
is
crazy
actually the
guy.
coolest. Gold is actually the coolest pair to trade because because see, gold has a very clear structure. If gold is bullish and you look for buy entries, just forget it. Actually, just that one thing that people are scared of about gold is just the volatility. But gold money is sweet. You understand? Yeah, gold money is very, very sweet. Like imagine flipping $5 to like 700K just two $700 with two setup. Like you get hey God bless you. I think this should be another block. This should be another block set up now. 15 minutes time. 15 minutes time. Yes, this is it. Sharp. Just that I don't like trading lower time frames like 15 minutes. I don't used to get clarity like that, but I think this one I saw this. Now see this. See market reacted. Market was reacting. This lower time frame just choppy. But if you look at it, you see we had an engulf from that zone. The candle that closed above it is an engulfing candle. Also broke structure to the upside. Now also had this. So what I was waiting for now was for price to go. When I saw price coming down here, when I saw price here, I was like, okay, price could actually react from here. And this is what happened. The food CP is straight. So just see if you can just follow the rules, guy. If you can just follow the rules, I doubt I doubt if you just be having stop losses like that. Just it will be rare. It will be rare. It will be rare for you to like have a trade that would actually hit stop loss. It will be very difficult. I'm not saying your trade will not go to move hit SL or something like that, but it will be very difficult. Be like kind of for your trade to actually hit SL. You understand? And now one thing it does for you is it helps you to know the trade that is valid and the one that is not valid. When to enter and when to exit, when to do this and when to do that. So that's just that about that. I think I still have some of them here. So this US oil. So we have more of other blocks should be on NASDAQ. But I think this should be another. This is another block entry. US oil, other block entry. Same rule. The candle closed above. Now broke structure, waited patiently, did not mitigate, in line with the trend, bam, TP8. Yeah, it was like in line with my direction. But this one is a continuation entry. So it was last week. So it's a continuation entry. So once you stick to the rules and you follow it, it will be very difficult for you to have stop losses like on the random. Your stop losses would be lesser. You understand? The stop losses would be very, very less. You won't have stop loss like as such. Now look at this zone that I mapped out here. Let me show you guys something. Yeah, I mapped out this zone. I mapped it down because I thought price would tap it from here. The market did not. It went down. So it was later when I was looking at this setup I now discovered that price came to it. I say so why? Because the other block, everything is intact, is very, very valid. The candle that closed below it. See, candle that closed, it closed below, it closed with a full body, broke structure to the downside. Now, what I waited patiently for now was for price. Like if I was actually taking the trade, market would have tagged me in and I'd have had this kind of trade. I was just focusing on gold and BTC that I missed this trade. Let's just say so. All my focus was on gold and BTC. So if you see it on the 1 hour time, on the 2 hour time frame, see full body close, full engulfing. Now what happened? Markets came and did what? So that's so just like I do say, it's the same thing. It applies to the bearish order block and the bullish order block. Sorry. So this is it. This is it. This is it. See, it works on every pair. It works on every pair. This trade alone is enough for the weekend. It's enough for the week. Well, just to focus on gold and bits. So this is it. I mapped it out for a long time. Just I forgot about it because I was thinking price. As I saw that price, this one missed. It did not tag it, so I just forgot about it. I deleted my sell limit actually. It was it was yesterday I discovered that the trade still played out. So this is it. I see. So it shows that the trend is actually bearish. My continuation entry we hit TP. Although sure, it happens. So sometimes it's like that. So that's just that. That's that for today's other blog stuff. And tomorrow, I thought I could talk about breakout blogs today, but it seems I cannot because tomorrow I'll be going to the church and I want to go early. So I have to go and sleep. Then tomorrow, I think same time tomorrow or tomorrow, I don't know if I'm going to host the class earlier tomorrow because tomorrow is Sunday. I would have known it to be maybe around 5 p.m. or 6 p.m. I think earlier so that by 7, 8 or 2 That's just that about other blogs, other blogs, other blogs. So if you have any question, you can ask me so that I can answer. If you have any question, you can ask me so I can answer. So do you guys have any question?
No, sir.
Okay, you're clear with it.
No, not yet for the moment.
Okay, okay.
Yesterday you said you would send a video to us, me and the other guy.
Yeah,
We're
yeah,
just
yeah.
still waiting.
I'll drop the both of them. I'll drop this one and the other one. I'll drop them. Yeah,
Thank you.
I'll do that. I'll do that after this class, definitely.
Thank you. Really appreciate
So
it.
okay, no problem now. So good night, guys. So I'll be seeing you guys tomorrow. I'll communicate the time. If you can't hold around 5 or 6, then it'll be same time tomorrow, 9 p.m.
No, the same time is okay.
Okay, okay, okay. No problem. Then see you guys tomorrow. Good night.
Good night,
Yeah, yeah.
Good night, boss.
Let me
Can you send the record now?
You said?
Hey, brother, can you send the record now?
Yeah, yeah. I'll drop it now. I'm dropping it right away.
No.
I'll send it right away.